Don Luskin, I must say that proposal does offend my sensibilities. If, in fact, this subprime CDO, CLO, collateral stuff, if it has intrinsic value, then why should the Federal Reserve get it? Why shouldn't private investors, entrepreneurs, call them what you will? Why shouldn't they do it and let markets sort this out? Because the liquidity run on the bank with the Bear Stearns, that's a different, separate issue. I don't think...
Well, the Fed's not going to buy up any loans, but they're going to do something fairly close to that. They're going to create the liquidity and the backstop so that intermediaries can buy up the loans. Now, you've got some of these BBB minus rated CDO tranches that are trading for like 8 cents on the dollar. You know, the worst thing they can do is go to 0, and they're practically there now. The best thing they can do is go to 100, and that's a 12-fold increase. So right now, if the Fed makes credit available to people like J.P. Morgan to take over distressed situations like Bear Stearns, where they're getting this kind of asset implicitly at 8 cents on the dollar, that's just a great deal. And we shouldn't be all that squeamish about moral hazard at this point, guys. The Fed was created in the wake of the banking panic of 1907 specifically to create moral hazard. So was Social Security, so was Medicare, so is welfare. We live in the moral hazard state, so get over it. We've got these institutions, let's let them at least work.
But as an investor, do you believe there's a contagion? Now, I think the disruption, the end of the Carlyle mortgage-backed, asset-backed hedge fund had a lot to do with the Bear Stearns story today. Not Bear Stearns particularly. Maybe they were linked, maybe not. But, I mean, the market's emotions, the market sentiment took a look at Carlyle, took a look at Bear, and decided to get out of Dodge 300 points down, although it closed up a little better. So, question is, did the market overreact? I mean, I just want to know, in your judgment, is the Bear Stearns issue a contagious issue, or is it an individual issue?
Well, let's take what Bear Stearns management has said about this all along at face value, which is that they don't actually have an economic problem. There is a psychological problem, which a story got started that they were having liquidity difficulties, which they kept denying. The SEC examined their books. The SEC affirmed that their denial was real, but the thought contagion just couldn't be stopped.
And they didn't have the reserves to stop a run on the bank when the psychology took over.
Well, nobody does. Goldman Sachs doesn't, Merrill Lynch doesn't, Citigroup, nobody does. You know, if people want to just go crazy and just everybody wants to pull all their money out of every bank all at once, you know, it's just like what if everyone in New York City decided to all flush their toilet at exactly the same time? That wouldn't work either.
If markets adjust, they can adjust fast. Markets are a discovery process. They're the most efficient agent of change, Don Luskin.
Right. Well, you know what? Well, you know what the... You know what Bush ought to propose and what Congress ought to immediately act on? It would be a way to let markets act more efficiently in the subprime housing crisis, and it would be this. It would be to create freedom from litigation so that mortgage servicers can case by case renegotiate distressed situations and be free from lawsuits from these people way down the daisy chain through all these different levels of securitization where there isn't clear authority to let the mortgage servicer do that. That's one of the reasons why markets can't clear right now. That could go through Congress like a knife through butter, and this whole thing would go away.
Luskin, let me ask you something else. With the Bear Stearns business today, we almost forgot about the Consumer Price Index, which was flat.
I was hoping you'd ask me about that.
Which was flat. I want to ask you about that. Now, it's flat in February, but it's up 4% over the past 12 months. And, of course, we know there's a wave of energy and gasoline prices and other commodity increases, not to speak of closing the week at $1,000 gold. Now, I am hearing from Wall Street, Don, that because the CPI was flat, the Fed has clear sailing, open field running towards at least a 75 basis point rate cut at the Tuesday meeting. You buy it?
Well, the Fed was going to do that anyway. The Fed's been pretending there's no inflation. So, yeah, fine, I buy it. But you know what? Nobody listening to the show, please tell me, nobody is going to believe that there was zero inflation in February. I'll tell you where the zeros are. 100 on the yen, 110 on oil, 1000 on gold. That's the kind of inflation we're talking about, Larry.
All right. What do you buy? Do you still stay with your commodity play?
I sure do. I'm the same kind of things that Stefan is, but I don't see him as growth plays. I see him as inflation plays.
He's been a great performer.